Hello friends and welcome to my YouTube channel Simply Stocks, and today I'm going to talk about GNA Excels, one of the marquee auto ancillary stock but is now dwindling down to its 52-week lows. Let's understand what needs to be done in the share and whether you should invest or not. So let's get started. First of all, a disclaimer that this is not a stock recommendation, and people taking any position into any share that I talk about should do that with their own due diligence and research, and I'm not in favor or against any company that I talk about. Now about GNA Excel. It was established in 1993 and they manufacture rear axle shafts and spindles for heavy commercial vehicles and medium commercial vehicles. They are one of the top brands in this segment of making axle shafts, and they came out with an IPO about a year and a half back, and they received a very good response of it, probably because of the small cap run up that was taking place in 2017 second half, but also because of the company's management pedigree as well as the way they have performed over the previous 3-4 years or the financial years. They and the production that they are doing is for the HCV and MCV segment, which were doing well, like Eicher Motors were doing really well during that point of time. They have top brands as their clients like Eicher, John Deere's and Escorts, and so on and so forth. If you look at the financials of the company, then you have sales that was up 11%, but look at that, the profit was up around 38% this year. And this is what I'm telling you, that although there is a slowdown in this sector, but GN Excels has done remarkably well to perform this well, although the tax benefit has also helped the company, but yet the profit excluding the tax benefit has also been pretty good, currently trading at a PE of only 7 and having a return on equity of 17%. This looks a very good bet at current prices with an operating profit margin of around 16%. So the performance of the share, the stock is down 55% from its peak of 2018, which is around over 400 rupees was the peak. The growth is slowing down for the industry and the company. That is understandable, and that is why the stock is falling, but the valuations look very attractive, as I mentioned, at 7 times earnings, with the profit growth being around 18-20% easily even in the slowdown. The management is pretty strong, the group is pretty strong, which have come out with the IPO about 2 years back, so it is not that a dodgy management is behind this company, and they have a very good dividend payout ratio over the years, and probably that is going to continue. And with the stock going down so much, the dividend yield has gone up around, I think, 2% is the dividend yield nearly. So what have been the reasons for the stock crash? Slowdown globally in commercial and retail vehicles. So we have seen the slowdown happening, and probably even with the numbers, the investors are not believing as to how the company would perform in the next 4 to 6 quarters, and they believe that the slowdown would continue and that will hit GNXL as it would hit any other auto ancillary company. The domestic auto numbers is nothing home to write home about. If you see that Eicher Motors has come out with the numbers, and they have been not good. I think the sales have gone down 30 odd percent, 35-37%, and you saw that the stock was down around 4% yesterday and down today as well. And Eicher is one of their major clients, GNXL, so it is quite synonymous that the stock would fall simultaneously to Eicher Motors or other companies which are into heavy commercial vehicles like Ashok Leyland, etc. The numbers are not encouraging as they were from 2014 onwards. So things are turning around. Probably this is going to take a year and a half to recover the domestic auto numbers, but then the move could be very strong in a company like GNAXL. Raw material cost has escalated because of the dollar rupee equation changing. They export a number of raw material products to produce the prices. The metal prices are now rising, as well as the thing that you see that many of the raw material cost has risen because of the oil prices. Oil prices was around 30 to 40 dollars per barrel during 2016 2017, is now around 60 dollars per barrel, and 60 65. So that has also risen, and we have seen a number of factors playing out globally, due to which the raw material cost has risen because of higher wages, etc. So that has also hampered the profitability of these companies all across the board in auto ancillary. Mid cap slam down is another reason for the stock crash. So all the mid and small cap is, in fact, this is a small cap company. So all small cap and micro cap companies have been painted with the same brush, and we have seen even top class small cap firms battered down to pieces, and that's why probably this is trading at 7 times earnings, and probably this is an opportunity in some of these companies. I'm not saying that you go ahead and buy a GNXL, but some of these companies are trading at very attractive valuations to buy at. Currently, the sector altogether, the auto sector, is totally out of favor, and probably for the next 1 year it will remain out of favor. And you would see by 2021 things recovering and people getting into autos when they think that probably that is the only sector that is cheap compared to other sectors. We have seen IT run up, even pharma is now going up, and we have seen consumer discretionary, FMCG, etc. Everything gone up so much that some companies are trading at 100 times, 80 times, 90 times. So people will look at auto ancillary later on as well. Probably this is the time to accumulate, and the small and mid cap has been battered out of shape over the last 2 years. So one needs to take that into consideration. If you look at the technicals, the 52-week low of the company is 210. It is trading at around 270 odd levels right now. The support, there's a strong support between the 240 to 260 levels, and this is where it is trading at. So around about 240 will be a very good price to buy it, even if you want to buy for a trade. 275 is the 200 EMA. There is a strong resistance around the 280 levels, so one needs to take that into consideration. So what one needs to do is probably accumulate around 240 250 levels and wait for a big move over 280 to add more. That would be a better strategy, because then you'll be in profit, and when you keep on adding, your buy price would go higher but the stock would go higher as well. So this is one good strategy. Or if the stock goes down below 240, then it will be a very good level to accumulate for 3 to 4 years period. There is a strong DII and promoter holding. FII holding is less, but domestic institutional investors are big in GNXL, and the promoter holding is also pretty good. The retail play is, I think, less than 15% or round about that. So what needs to be done in the stock? I believe that you can accumulate over the next year to 15 months, 12 to 15 months, keep on accumulating on an SIP basis, wait for the turnaround in the sector, and have a good 4 to 6 years view, 4 5 years view. Keep accumulating, look for results, look for betterment in the results, or even if the results are bad, look for very good prices to buy at, closer to 220, 230, and so on and so forth. Do not invest more than 5% of your capital, and do not invest everything altogether right now. Keep on doing an SIP into such stocks, and this sector may test your patience. So this will not move like anything straight away. I think this is going to take a year and a half to move, but when it starts moving, I think auto ancillary will do really well. So look at Mothers and Sumi, look at GNA Excel, look at Automotive Excels, look at Bharat Seats, and so on and so forth. There are many in this who would do well, who have done well during that 14 to 17 period. So this was my video on GNA Excel. Please like and subscribe my channel, hit the bell icon so that you can get my videos straight away when I post it. Thanks a lot for watching.